Alright guys, we have a lot to talk about in a very short amount of time, so let's get into it. AMC stock is waiting for GameStop earnings. It's pretty clear that GameStop earnings are going to affect AMC. So what is going to happen with GameStop earnings? What do I think will happen? That's what I want to talk about. It is a bullish thesis, but feel free to leave your bearish thesis down below in the comment section. We also have a lot of news involving Russia and Ukraine and a Russia possible default that is coming here very shortly. So we are going to get into this video. The only thing that I ask is that you hit the like button, subscribe to the channel, and comment down below. Let me know your thoughts on this whole entire video and get yourself those free stocks. Links down below in the description for Webull, Moomoo, and Public. Specifically with Moomoo, this promotion will not last too long. Sign up, deposit $1, get 3 free stocks as well as an additional free share of NEO, and Chinese stocks have been going crazy, so definitely check that out while it does last. If you guys want to come trade with us, last but not least, link down below in the pinned comment. Okay, so AMC is up 1% for the day. GameStop is up, let's see, I actually didn't have it pulled up, but GME is up 2.57%. This is a very small move relative to what we could see. Even over the past couple of days, GameStop has moved down. Look at this, 4%, 8%, 15%. So to see a big move upon GameStop earnings will not surprise me. And the first thing that I want to call out is GameStop is not priced for good earnings. Think about this like the Fed. I was saying the markets would probably rally like they eventually did, right? But I was saying the markets would rally after the Fed for the last week because the markets were pricing in too much bad news and too much fear. That's what it looks like the markets are doing with GameStop as well. GameStop's market cap is only about $6 billion now, a little bit less than that. So it's not pricing in a whole lot of optimism here, and potentially what is going to cause GameStop to rally, and really the only thing that will cause GameStop to rally in my personal opinion, is their NFT platform, because OpenSea is valued at $12 billion. If GameStop can come in, make their own, and give some kind of guidance for when that will be live and available to actually use, then you will see GameStop get a certain multiple like OpenSea. If OpenSea is valued at $12 billion, GameStop might get a $3 billion valuation from that NFT business because it's almost the same as OpenSea, right? It's kind of like real estate in the same neighborhood. You're kind of going to be valued along the same lines, but obviously at a discount for GameStop because it's not OpenSea. And considering GameStop's market cap is $6 billion, even if they got a $3 billion added valuation because of their NFT platform, you're going to see the stock go up dramatically. You would see a 20 or 30% pop. In my personal opinion, that is possible. I wouldn't bet on that, but it certainly can happen. So that's really my expectations for GameStop. It only matters, investors only care about the NFT platform, and that will feed off into AMC stock. I will remind you that we are above $15 per share, and if we don't have a big rally by the end of the day today, then I do think that will come on Friday, and you'll get one of those mega bounces as the stock price will likely go up off GameStop earnings, and you will see all of that instant hedging that has to take place. So long story short, that is the summary of what I think is going to happen with GameStop and why I kind of think everything is a little bit muted today. AMC up 1%, not a huge move. GameStop even up 2%, not a big move. They're waiting for GameStop earnings. So let's get into some of the other information that you guys need to know, and it's pretty interesting. Russians have up to 213 billion stashed offshore in Swiss banks. Now, why is this so significant? Because Russia has a lot of bond payments that are coming due, and their reserves were stored in Swiss banks. Now, Russia did this because they figured, hey, the Swiss will stay out of it. They're not going to get involved with this. They historically have never got involved with two-sided conflicts. They stay neutral, and they use their banking for that. They're historically known for letting Nazis and other people bank with the Swiss banking system, but now they have historically changed their stance to go with America and the Western countries instead of just being neutral. And that really killed Russia. Russia yesterday came out and said that essentially it's the West's fault if they default. Of course it is. I mean, Swiss went with the West. So that's going to be a big situation. They actually did make their payment for today, so they're not going to default as of right now. But, and it says right here, Russia says it made a payment to avoid default 15 minutes ago. So they just made the payment, it looks like, but they have more payments to come. And that was my daughter in the background saying, help me, help me. So I had to go help her, give her bottle. She has a memory of a squirrel, so if she loses something, I gotta like find it for her. Nonetheless, this says Russia has an additional 615 million of interest payments due over the rest of March, and we need to make, or will need to make its first principal payment. I don't think that's our problem. It says when a bond is paid back in full of 2 billion on April 4th. So April 4th will be the time when they technically default. It's called a technical default when they don't pay the bond payment on the due date. They do also have a 30-day grace period, but once the technical default happens, the markets really don't care if they pay it on the grace period. They will react off of the technical default. And the biggest problem here is that Russia has a lot of their currency, their reserves, like I said, in Swiss, but as well as that, there's about $40 billion of direct exposure to Russia here in America, and there's over 150 billion of direct exposure to Russia in Europe. Who knows what that number is in China, and who knows what kind of derivative exposure they have on these assets in Europe, China, and America. Because let me remind you, it was not mortgages failing in 2008 that took down the global financial system. It was mortgages failing, but the banks were packaging bad loans together and then marking them as good mortgage loans, good mortgage packages, right? And then they were betting on those bad mortgages. So it was really the derivatives that took everything down. And I do apologize for the noise in the background. Not too much I can actually do about that right now. But that's the current situation that we are faced with. So I still think the markets are going to come down in a substantial way, but I think we could rally between really now and this Russia technical default as long as the situation does not get worse. As well as that, you are seeing Biden is going to be speaking here shortly, and then Biden to discuss Russia's war against Ukraine with Xi Jinping on March 18th. March 18th is tomorrow, and that will also be another big catalyst because China has kind of been on Russia's side, giving Moscow support. But at the same time, just yesterday, they came out and said they praised the Ukrainian people for the resistance that they are giving. They pledged to help regrow the country and be a good force for Ukraine. That was their exact words, but kind of paraphrasing here at the same time. So they've kind of switched their stance to more of that neutral status and had some very good things to say. So if China does not continue to take Russia's side, it's only a matter of time before Russia will have to give in. Even with the technical default, that means they cannot pay their obligations. They cannot pay their troops. Their currency is basically even more worthless at that point, and the situation would not be good for Russia, but it will have spillover effects to the broad markets as well. But now let's get into specifically AMC. So we're looking at 21.16% short interest of free float, 109 million shares that are sold short. Cost to borrow max of 3.94% and utilization of 100%. Days to cover is sitting at 2.88. So if we do see a bullish reaction from GameStop, if we see good earnings from GameStop and it makes AMC go up, you're going to see a dramatic sense of events probably in after hours today, as AMC's option chain is just wild. If you guys have actually not seen that, we'll pull that up quickly. We are above $15 per share, so we have a lot of calls that went to the money, a lot of puts that went out of the money, but there's a lot of option activity. 16,000 700 calls at the 1550 strike, 21,000 at the 16, and then on the put side at the 16 put, you have about 15,000 for open interest. So there's a lot of activity on this option chain, and if we can see that rally in after hours because of GameStop, that will be a very good thing. The option activity, the option flow for AMC is 0% positive. 9 orders totaling 811,000. Let's pull up GME and see what that says for the option activity, because that's going to be a good one. And it says 0% positive order value, but we still have some more time before the end of the day. So these numbers could change around a little bit, and I expect that they actually will. I am actually very excited for GameStop earnings because I think it could be a really good one. And nevertheless, if you guys want access to all of my trades in real time, check that out. Link down below in the pinned comment. If I do make a trade on GameStop or a sympathy trade, then I will send that alert out like I do for any other trade that I make, and you definitely want to be a part of that. As far as what you guys need to really pay attention to, it's going to be the Fed rate monitor tool, and this is kind of starting to price in a 0.5% rate hike by May 4th, and the higher that gets priced in right here, it's only at 26.2%, you're going to see the markets selling off on that. So that's going to be the next big fear catalyst, as well as Russia a potential default, is that 0.5% rate hike that may be coming. So keep that in mind as far as the max pain is concerned for AMC stock. Let's go ahead and pull this up briefly. AMC, I believe it was at $16 now, $16. So, you know, if we can even get to that, that would be good heading into next week. But I think we'll probably be higher than $16. As far as the technicals, like I said, watch that $15 level. That's going to be the most important level. On top of that, the 20-day simple moving average in the Bollinger Bands is also another key level at 1647. If we can get above all of that, could be clear to go to 1850, in between 1850 and 21, possibly tomorrow. That would be a big move to the upside, about a 20% move to get to 1850. I think it's possible, but I might be wrong in my price prediction video on Sunday. You really haven't seen that bullish reaction. It all comes down to GameStop earnings here in after hours. So that's going to be all for this video. Hit the like button, subscribe to the channel. I do apologize for all the noise in the background. I hope you guys don't mind. Get yourself those free stocks down below in the description, as well as come join the trading community. Link down below in the pinned comment. Thank you guys for watching. I'll see you later on tonight on the live stream. Until then, you guys enjoy your day, and goodbye.